News9 Live. I am Krishnakumar, and of course, over the next 45 minutes, we'll get you all the big headlines from the world of business, economy, and finance. And we begin this hour with a check on the stock markets. The Sensex and the Nifty both zooming in trade today. The Sensex ending nearly 500 points up above the 65,000 mark for the first time. And the Nifty also up nearly 150 points, closing up above the 19,300 peak again for the first time. Karthik and Suyash can join us in the studio, and we also have Mr. Mohit Gang, co-founder and CEO of Moneyfront, joining us on this broadcast. I want to begin with Karthik. Karthik, talk to us. Markets have been on a roll last week, and it seems like there is no end to that roll. It's continuing.
New highs every day, and I think the fears of the markets being overheated are absolutely right now. And I, for one, am really skeptical. Is there going to be an event where these highs that we are seeing every day will stop happening, and rather the reverse would start off? I don't know.
Well.
19,322 on the Nifty, 65,205 on the Sensex. Both well above the 65 and 19,000 levels respectively.
Right, fantastic. Suyash, talk to us. Tell us, give us a lowdown of what it was, what trade was like today. Who are the big gainers? Who are the big losers?
So this was a sixth consecutive session of gains for the Dalal Street. Now today's rally, the main contributors were banking and financial stocks. Nifty PSU Bank Index was up about 3.6%. Financial Services Index was up about 1%, and Nifty Bank ended at about 0.92% higher. Now, on the other side, IT and pharma stocks witnessed some sort of profit booking. Nifty IT was down about 0.5%, and Nifty Pharma fell about 1%. Now, among individual stocks, Grasim was the top gainer in the Nifty pack. It rallied about 3.4%. BPCL, ITC, Reliance Industries also surged about 2% today. Among losers in the Nifty pack was Power Grid Corporation, Sun Pharma, Bajaj Auto and Cipla. All of them were down about 1%.
Right, so that's a quick roundup of what the trade was like today. Karthik, also a first day of trading for the new merged entity of HDFC Bank and HDFC, which is now just officially HDFC Bank, also doing well in trade today. As you're talking about banking stocks doing really well in trade today, we have Mohit Gang, co-founder and CEO of Moneyfront, also joining us on this broadcast live. Mohit, thank you so much for taking time out to be with us. Talk to us. 65,000 peak has been scaled on the Sensex, 19,300 on the Nifty. Banking stocks doing very well in trade today. However, IT and pharma seeing some profit booking.
Yeah, so look, I think Krishnakumar, we had a conversation some few days back also, and I think the momentum has been ferocious in the market, for lack of better words. The underlying current is so strong, and the momentum trades are now heavily loaded in favor of the bulls. So look, obviously, I think everything looks hunky-dory as of now as we speak. There are no negative alarms for me to be raising on this show. India continues to be a shining story relatively and absolutely both, basically, right? So you are the fifth largest economy, you're going to be the third largest economy in next couple of years. And you see the GST collections, you see the manufacturing PMI, you see the inflation numbers, the interest rate cycle kind of looks like it has peaked, and everything is speaking in favor of the markets. The story looks rock solid right now, and the ship is sailing smooth. And as I think one of you guys pointed out, unless there is an event which unfolds, which is unforeseen, or there is some global shocker which comes out, right now it looks fairly pretty, honestly, on the screen.
Okay, if I were to ask you, what should be the investment strategy of an average, person who's investing, or in financial products linked to the stock markets? What is the right way of going about it right now? What is the kind of funds that one should invest in? Because they say that the mid caps and the small caps are overpriced in the market at this stage. So is it a good time to just buy funds on indices and also large caps and blue chips?
Look, so I have a little bit of a contra view on this one. Honestly, to my mind, mid and small caps have rallied after a fairly long course, and they aren't looking as expensive on the screen. Look, if you were to see the Nifty small cap index per se, it is quoting roughly at around 20 times current year multiple, which is absolutely nothing for a small cap index when your Nifty itself is quoting almost a 21 times earning multiple. So relatively speaking, a small cap index has never been cheaper than a Nifty broader index itself, which is happening currently. The mid cap index also is quoting somewhere in the range of around 26 to 27 times earnings multiple, which again is not a expensive zone for a mid cap index in India, and historically whatever we have seen, right? So these two indices are not very costly. The larger index, yes, is a little costly right now, but not like way off the charts that it seems dramatically costly. And look, what will also happen gradually is that right now we're looking at FY24, right? Within a quarter or so, we will start discounting FY25, and then again it will start looking pretty reasonable to all of us. So I think market is kind of factoring in all that. Plus, market is also factoring is a huge election year, and I think there will be a lot of ground spending which will happen. There are state elections which are likely to happen this year, and then the general elections next year, and all of this historically has given a huge boost to consumption on the ground level, because there'll be money spent on the ground, and I think that helps local consumption. So all in all, as I told you, it looks fairly good. To answer your second part, which is what instruments look good. Look, I've always been a stronger advocate of mutual funds if you're not directly sitting in front of the screen 24/7. If you're not one of those who have hands.
Fair enough, Mohit. The question was like, what kind of mutual funds? Because you have large cap funds, mid cap funds, small cap funds, flexi cap funds, index funds. What seems like a safe bet right now? And also, if somebody is entering the market right now with fear that oh my God, this is an expensive market, and what if there's a correction couple of months down the line, with those fears, who's entering the market?
Okay, I got you. So look, I think if the right approach is always to follow your asset allocation, go with the asset allocation approach. So if you're underweight equity, obviously you have to go into equities right now. And within equities, if you honestly ask me, I am comfortable today allocating into mid and small caps. As I told you, if you are underweight within the overall equity basket, also you have to see how you are positioned relatively within the large, mid and small cap zones. And if you are, let's say, even neutral to underweight on the mid and small caps, I would then want you to take the positions up into these two segments and build your positions from here. How to build can be debated. And I think that the right way is through an SIP or an STP. I would still not recommend that investors jump in with a huge pot of lump sum at this point in time. It's better to stagger out for next 6 months to a year kind of a time frame, and that to my mind is the right approach. But yes, mid and small cap can be considered, provided you are not heavily allocated already and you are equal weight or you are underweight these two segments, then one should enter mid and small caps. Otherwise, obviously, if you want a slightly more safer zone where you don't want to risk your capital erosion in times the market's correct, then yes, large caps have always given that cushion and will continue to give that cushion. But if you ask me one line answer, I think mid and small caps could be considered at this level also through a staggered approach.
Mohit, I want to come back to the banking and the financial space. It has been pretty active lately, and the Nifty Bank also touched a lifetime high today. So what's driving interest, buying interest in the banking space, and is it overheated, or there could be more upside in the offing?
Look, I think banking always is the lead indicator of the economy. And BankX has always provided that impetus whenever the economy looks good and everything is going on good. Plus the interest rate cycle, which has already peaked, is a big trigger for the bank books itself, right? As the interest rate cycle reverses, which can be perhaps 6 months down the line and not immediately, but the banks will have a huge mark-to-market gain on their bond portfolios, whatever they're holding. So that's point number one, and I think market is already discounting that. And the second part, which is the most critical part, is the PSUs have been laggards for many years put together. It's just that this year, typically we have seen the PSU banks rally a lot, and I think look, it's a story of cleanup all across. If you see the NPAs, if you see the numbers and the kind of profitability that the PSU banks have been putting up, that's all at all-time highs, right? The NPAs are at an all-time low and the profitability indicators are at all-time high. So it's a long overdue kind of a rally. So PSUs have rallied. Some names are still catching up to that thing. So I think predominantly it's a PSU-driven rally. Smaller PSUs per se are now catching up to the bigger names and are catching up to the private banking peers, which have already run up quite a lot. So I think that's the zone which is looking positive right now.
Right. Mohit, if I were to ask you, keeping with the banking space, you're looking at the first day of trading for the new merged HDFC Bank entity. Talk to us about that stock, from the way it traded on day one.
Oh, look, it's an all-time high now, right? And technically, everything indicates to a good momentum from here on. It'll be a $17 billion kind of an entity when it comes on the market cap front. It's still nowhere compared to the leading banks globally, but it's become it's like one of those too big to fail kind of institutions, not just in India now, but globally also, right? So I think from that perspective, it's a great buy. And though obviously there'll be some rebalancing on the index portfolios across, because few of those index funds and ETFs which cross the limit, let's say a SEBI defined limit of 10% in each fund, they can't have more than 10% exposure in a single stock. So I think there we will see some trimming out across the other categories of funds where fund managers continue to hold HDFC Bank and HDFC Limited both. I think there'll be some shuffling within the portfolios, because there'll be many schemes where they could afford more of HDFC as a combined entity. But index funds and ETFs could see some selling pressure. But I think there is enough and more appetite in the market with the FIs pumping in a lot of money and overall looking good. I think it is showing good signs of a long-term buy still till now.
Mohit, talking about FIIs now, FIIs had been, for institutional investors, had been net sellers for the last 2 financial years, but since the start of FY24, they have contributed over $10 billion in the Indian market. So why are they so gung-ho about the markets? What's driving this optimism?
So I don't know, better late than sorry. I think they've kind of realized that the party is on for long, and the fundamentals of the ground level stories are changing. Honestly, I think it is some bit of China story also, which is played down to a large extent. This role of FII is coming back to the Indian markets. But I think, look, domestic story was fairly strong last full year, and perhaps foreign investors have realized that the kind of domestic flows and the domestic confidence which investors have been showing is phenomenal. Plus the ground level turnout. I'm just talking of some small indicators. Look at the GST collections right now, right? 1.67 lakh crores last month and 1.87 lakh crores a month before that. Those are all-time high numbers, and they are slated to go up again, right? Even if you have an average monsoon by all indicators, you will still have earnings growth of around 10 odd % this year. And a nifty EPS of over 1,000 for this financial year end, right? So those are all great stories. You have phenomenal amount of interest right now from not just domestic institutions but all the foreign players, and plus that India shining story all around. A stable government is helping the courts, and though elections are big trigger points, I'll again repeat that, and there could be an event risk around that, but as of now the way it looks like, it is a great story for India which is going on, and everyone
Mohit,
wants to
hi Mohit, Karthik here. Just
Hi,
wanted to get your view on the fact that, this also happens to be the time, and I want to bring this back to the end consumer, the investor. This happens to be a time when increments have been rolled out and a few lucky folks out there would have possibly got some hefty bonuses. So would it be a prudent time for them to invest directly in equities right now?
Oh, look, I've always been maintaining that the right time to invest in equities was yesterday, and today is the second best day. So obviously, if you've got your fat bonus checks,
technically you're right, because it's scaled new peaks today as opposed to yesterday or Friday for that matter.
Totally.
But a lump sum direct equity investment route, is it a good time right now? I know it's difficult to time markets, but with your experience and having looked at the whole graph over the last so many decades, is this the right time to bite directly?
No, not direct equity, to be very honest, unless, as I told you, you are a pro in front of the screen and you have your hands completely into it. Otherwise, I think go with an index fund. Look, I think you never go wrong with those simpler instruments, simpler mutual funds, basically. Just pick up a right index fund, a low cost instrument, and you will never go wrong. Start with a staggered approach. You don't have to like put your entire 100 rupee of bonus into it. Stagger it out for next 6 months, but get in today itself, right? So don't delay the entire process, because markets will prove you wrong eventually if you keep waiting on the sidelines, and that's the nature of the market, right? So you just have to get in. If the money is for long term, go ahead, buy an index fund, and if you're already invested, you already have an existing portfolio, then yes, do definitely look at increasing your mid and small cap allocations. I think the story is good. If you have a 5-year tenor, you should dabble into it.
All right. I have one last quick comment I want from you. We are at the 65,000 peak. We're in July. Where do you see the Sensex ending the calendar year?
Oh no! So look, don't put me onto this spot. I would just like to say that a famous couplet which says "सितारों से आगे जहां और भी है." So I'm sure there are many more skies to be conquered. But
Fair
yes, you will
enough.
have interim volatility, and people have to be cognizant. Don't please jump in and rush in to make that quick buck. Be very aware of your risk profile and just dabble in small and nibble small.
Oh, lovely. Thank you so much for that piece of advice, Mohit, because amidst all the frenzy, amidst all the peaks being scaled, Mohit Gang, co-founder and CEO of Moneyfront there, rationalizing it for you. So it's all good. You should have gone into the markets yesterday, but in case you're going into it today, slow and steady is the approach. One little bite at a time, staggered investment over the course of the next 6 to 12 months is the word coming in from our experts. Moving on here on the show, we're keeping it about money. Don't worry, we're not going too far away from that topic. Money and the rupee, to be specific, because just 6 months after the e-retail with the digital e-rupee was introduced by the government of India, there has been a major overhaul. What that overhaul now means is that you can make your e-rupee payments for your e-retail transactions through the same QR code that you use for your UPI transactions with your regular rupee. To put it simply, the digital rupee can now be given, paid and taken with the UPI platform with the same QR code as the UPI. And what does this mean for the e-rupee? What does this mean for the government's ambitious e-retail program? We will find it out over the course of the next 15 to 20 minutes. We have some special guests joining us. We have Mr. Ravi Sharma, Director and Co-founder at Fincart Financial Planners, joining us. But before that, let me take this across to Karthik quickly for a bit. Karthik, first of all, it sounds a little complicated. There is the e-rupee, which is the digital rupee, which is central bank digital currency, CBDC, which is what is used to pay for your e-retail transactions. And for that, you have to have a separate QR code as of now. But going forward, you don't need to have a separate QR code. You can make that e-rupee payment for your e-retail transactions to the same UPI interface or the UPI platform. Correct me if I'm wrong.
No, you're right. But let's just take a couple of steps back and understand what this e-rupee or the central bank digital currency, CBDC, really is.
Right.
Now, when it was announced, when the CBDC was announced back in 2021, there was this huge talk about this being India's answer to cryptocurrencies.
Right.
It's anything but. Okay, so let's put it into perspective. It runs on the same technology as the cryptocurrency, which is called blockchain, which means it's a distributed ledger, and the transactions go through multiple of these ledgers before they get executed and get recorded in each of these ledgers. So it restricts the amount of fraud that can take place in the system because it is backed by the blockchain technology. Now, take one step forward. CBDC is not cryptocurrency. CBDC is legal tender being launched by the central bank, the Reserve Bank of India, and it is primarily a replacement for physical cash or cash in bank, so to speak, right? So it's a replacement for cash. It is legal tender. However, it's still in pilot stage. Now, some folks, including me, have got SMSs from respective banks where we have accounts asking us to download or install a e-rupee app linked to their respective banks, which I haven't done. I haven't done because I don't know whether that message that came to me was an authentic message or not.
True.
But yeah, I did click
One
on the link.
should always be very wary.
I did not install it. I did click on the link and it took me to an authentic looking app platform on the App Store, but I still did not download it. But people in the industry and in the circle who have installed it can't tell the difference between the e-rupee and, let's say, a prepaid wallet like the ones we were once upon a time used to before the advent of UPI with, let's say, a PhonePe or a Paytm. So at Paytm wallet, what you would do, you would transfer money from your bank account into a digital wallet, and you would spend money from that digital wallet to buy goods or services or transfer money to another wallet. that is exactly what the e-rupee also looks like in its early days, right? Now, unlike a UPI transaction, what happens in a UPI transaction is you scan, you pay. Money gets debited from your bank account, credited into the bank account of the beneficiary. In this case, if you were to, let's say, use the e-rupee, you scan and pay, money gets debited from your e-rupee wallet and credited into the beneficiary's e-rupee wallet.
Right.
That's the process up until now. Now we are talking about this interoperability. Now, I think the RBI believes, and rightly so I would add, that for the e-rupee to get easy adoption and faster, quicker adoption, it needs a lot of retail level participation. This means retailers need to be in a position to accept e-rupee payments for the consumers to eventually download these apps and pay using the e-rupee. Right now, in its pilot stage, last 6 months or so, that the digital retail level e-rupee has been launched. Of course, they did a wholesale version earlier, but ever since the e-rupee retail has been launched, we've seen transactions of just about 16 crore or so, which is actually just a drop in the ocean when you talk about India's overall financial transactions every day. Now there is interoperability, which means the retailer will not have to download or sort of print out another QR code which needs to be scanned by another app which uses only the e-rupee. Rather, the UPI QR code, if scanned using, let's say, an e-rupee application, will still work as well. Right. Except that money now gets debited from the wallet instead of from the bank account and gets credited into the wallet rather than the bank account. So that's the main difference between the two.
Right. So, but that wallet format continues to remain. It's just that there's interoperability using the UPI at the end of the day. So let's try to understand this better. We have a very special gentleman, Mr. Ravi Sharma, director and co-founder at Fincart Financial Planners, now joining us. Ravi, thank you so much for taking time out to speak to us. First of all, the e-rupee itself is at a very nascent stage, and so is the wallet, the e-retail wallet that we're talking about over here. And then now you have interoperability. How much of a push do you think this will give for the e-rupee?
Hey, I think Karthik has explained very well to it, actually. It's more or less like another version of the UPI. But let's try to understand a little bit supported by the data. Okay, so first of all, I mean, it's a digital India. We all want to make things digitally as much as we can. So you understand, I think UPI has been a very big success for us. And today we take a lot of pride of this UPI ecosystem, which is technically challenging some developed economy like US and Europe at this point of time. Yet, if you look at the data, interestingly, India has a more than 76% penetration in terms of smartphones, yet 46% penetration in case of UPI. So there's a huge gap in between people who have a smartphone and yet not using the UPI. Imagine it, the day a 76% people start using the digital currency. So you can imagine this volume which are reflecting 14.89 lakh crore in May 2023 will get multiplied at least by double on a month-on-month basis. So the idea for the government is basically, I think printing the currency is one of the biggest costs for the RBI. They want to reduce it. How it is going to be different than UPI versus e-rupee? See, you can target those people who still does not hold bank account. If you look at the penetration of the bank account so far, even government been pushing so hard for opening a zero balance account or a low maintenance account. Yet the India penetration in terms of bank account is less than 75%. Okay, so yet there is a big market. There are a lot of there is a, if you look at the lower middle class or the lower class audience which yet to adopt these kind of services. Now, the biggest challenge to implementing these kind of services is people already habitual of using UPI. Today, even you buy any small thing, even a 10 rupees thing, you prefer to do UPI. So what made people to adopt a e-rupee as well? So the biggest challenge will going to come, I mean, of course, I think we have a chat with a couple of merchants as well. I mean, they were facing the same kind of problem in 2020 or even 2019 as well. where they were not having one common QR where they can collect payment from either from company like Paytm, BharatPay, PhonePay, GPay, the Bhim app. There are a lot of apps were there. So that is how UPI could able to solve and got bigger success in that. They could able to get a common QR code which allow merchant to accept payment from any of the vendors. That's one part. So this time the RBI been little proactive, I would say, into implementing this e-rupee. What they have done, rather finding the bottleneck later on, and then they don't want to fail this point of time. So they are coming with interoperable UPI, where the merchant will have two separate, you can say, the wallet. One would be the UPI linked bank account, and another is e-rupee wallet. So if I am transferring the money from e-rupee account, then that will credit in his e-rupee wallet. If I'm transferring the money from the UPI account or from a bank account, that will credit in his UPI account, which is linked to a bank. Now he has a choice whether he want to convert that e-rupee account money into a UPI account and then use his bank balance in whichever form they wanted to. Till time it is not doing it, and you want to transfer that e-rupee money to somebody who want to have an e-rupee wallet, you can easily do it. I think it's more for a penetration perspective, because the government still feel that a big market, as I said, there's a gap between 76%, 46%, almost a 30% gap in terms of penetration level, which is yet to be targeted by the government.
Ravi, tell me something. You know, we all believed back in the day that UPI has pretty much killed what was a nascent and a highly fresh off the oven but a booming e-wallet industry, right? We saw the likes of Paytm wallets, etc. come and go as quickly because UPI was so easy that it replaced the need for loading up wallets with cash and using those wallets. Rather, the process and the transaction was as seamless using UPI. Now are we talking about the CBDC actually replacing the UPI with pretty much the same old technology of wallets? What is the difference between the wallets that we were once used to and the e-rupee?
You see, it's not main of the replacement. As far as what we understand is, it's not a replacement. Rather, it is targeting the audience who are yet not using the UPIs. So in the previous arrangement, in case of wallet, there used to be a problem of, like, if I have a wallet and if I want to make a payment to you, then you should also have that similar kind of app or similar kind of wallet. Then the transaction can be.
But that's going to be true even in this case, right? You will still need, even for the e-rupee, I will need a wallet and you will need a wallet for me to be able to pay to you. So it's pretty much the same technology of e-wallets that we have seen and outgrown by UPI.
Naturally, I mean, if you look at the more or less on the underlying perspective, it is more or less, it seems to be safe, but there are a big audience who are yet not comfortable for using the bank account. They are not using it mainly because it is linked to the bank. And somebody who does not have a bank account and yet want to transact, I mean, it's basically a replacement of the cash transaction. For those kind of audience, I think that is the government initiative to target those kind of audience. But our feeling is that people who are already using the UPI, for them, it may not be a very great idea in terms of replacing UPI to a e-rupee. It is only for people who are not using it UPI so far, and they just simply want to do the cash transaction. That could be the one mode of way of transporting the money from A account to B account, especially this 30% audience which yet not using UPI despite having the smartphones.
Right. Ravi Sharma, Director and Co-founder at Fincart Financial Planners, joining us on that subject. Thank you so much for joining us. We are keeping it here with the money, but moving on to some real money and real rupee notes. We have a news update for you before you go any further. Now, the RBI, Reserve Bank of India, has said that 76% of the 2000 rupee bank notes that have been in circulation as on the 19th of May 2023 have since been returned. 87% of the 2000 rupee notes that was returned was in the form of deposits, and only 13% were notes that were exchanged at the counters. That's the latest update, ladies and gentlemen, that's coming in on the 2000 rupee notes. 76% of them have been returned. And of the 76% that have been returned, 87% of them was in the form of deposits, and only 13% were exchanged at the counters. And this at a time when the State Bank of India has gone ahead and has rolled out cardless services across all of its ATMs. That's right, any State Bank of India ATM can now transact, and you can withdraw money or deposit money without having to carry a card to the ATM, and that could yet pave the way for more cardless ATMs across the country, across other banks as well. We have Karthik joining us. We have a couple of guests joining us as well. But Karthik, quickly your take on the fact that at a time when we're counting the 2,000 rupee notes and how many of them have come back, is State Bank
I had none.
State Bank of India had gone ahead and said that, heck, you don't need a card to enter an ATM, because we thought to go to an ATM, the one thing that you need is a card.
Card and a pin.
Yeah, of course.
Yes. So, yeah, that seems to be history now. But one thing is for certain, that even with this new technology of cardless ATM transactions, the ATM machine over there is not going to dish out any 2,000 rupee notes. Not for now, at least. But, yeah, again, I mean, we're talking about interoperability. Yeah, that seems to be the buzzword today, interoperable QR codes and whatnot. So, it's again targeted at interoperability, where you now get to visit an ATM, take out your phone, scan the QR code, and when you scan that QR code, which you could scan using any banking, net banking or phone banking app that you may have on your phone, not necessarily SBI's YONO, though SBI's YONO has also become feature rich, etc. now, but you could take out practically any banking app, scan the QR code, and you could transact and take your cash out. So again, what does this do? This primarily reduces potential fraud by way of reduction in cloning of cards, because you don't have those cards. Theft by way of the cards getting stolen, getting lost, getting taken away. So, yeah, I think interoperability overall making the process seamless, making your wallets thinner for sure. And in general, I think it is good that you now don't need too much to really, get access to your cash. You don't need a wallet, you don't need multiple cards, and you can just scan a QR code and get your money out. But while it's great news, I think overall the way digitization is happening, and we were just talking about the e-rupee, I wonder how long before ATMs actually get outdated and obsolete.
Oh, that's something to ponder upon. Even as we discuss the e-rupee, the digital currency, ATMs becoming, less and less hassle-some. Incredible. The only thing I could think of was that, the cardless ATM can also help the silent epidemic that is forever raging, called absent-mindedness, of people, misplacing their cards, leaving their cards in the ATM so many times it happens, and that goes away, and you have a QR code. Of course, absent-mindedness has to be controlled at some stage. You have to at least carry your phone to the ATM. Now, you have to carry something inside the ATM. If not the card, you have to carry your phone. So don't leave your phone anywhere. But then it is the way forward. Certainly, it's looking like it's the way forward. Cards could be a thing of history. And if cards are a thing of history, how long will ATMs sustain themselves is a big question.
But you know what I would really look forward to, Krishna? You're talking about leaving things behind, either at the ATM or forgetting to carry them, absent-mindedness. You can never really forget your thumb or your eyes. You've got to enter the ATM with them. I think the next level of technology has to be, since everything is interlinked in any case, and we're talking about interoperability, all your bank accounts are already, KYC'd with your Aadhaar card, and your Aadhaar has your biometrics.
Right.
Why do you even need devices? It should pretty much be able to authenticate by using your fingerprint or your eye impression. It should be as simple as that. We're talking about Digi Yatra. We are talking about so many other facial recognition, biometric-based advances that we are making. I don't think the BFSI sector should be lagging behind in it.
All right. Let's get a quick comment on that from Ravi Sharma as well, director and co-founder at Fincart Financial Services. Ravi Sharma, cardless ATMs. But are we, moving towards an ATM-less world, or should we move towards an ATM-less world?
I can say. But you see, again, I just would like to highlight the point of it. Today we are talking about the cardless ATM would be the new era, and a lot of people will be accepted. A lot of people have acceptance on it. Let me make you understand another interesting data of it. Today, when the 100 card get issued, despite the rupee has become successful and the government being very, very, I would say, pushy in terms of promoting a rupee-based card, yet the market share of the rupee-based card is less than 45%. It's 40 to 46%, the last number which has came. Which means that yet the 55% market share being held by the Visa and MasterCard. And if you look at the cost of carrying the card and the bank which really need to spend to afford that ecosystem drastically will go down for these kind of initiative. So I think it's another step of the government, or I would say the BFSI sector, to enlighten doing things which is make in India based, and doing away from those kind of ecosystem which been using on a borrowed way from the Western countries. So this not only will help the reduce the transaction cost, but as well as the cost of maintenance, and it is going to be more indigenous as compared to what we have been using it for the last 10, 15, 20, 25 years. I think this is a very welcoming stage, and we'll see the new era which is coming it, the cardless. We don't need card anything to swap it. Subject to we'll have our smartphone, and this is, I mean, we can verify with the mobile number.
Fair enough. Ravi Sharma there joining us, Director and Co-founder at Fincart Financial Planners. Thank you so much for joining us. We are keeping it with money and transactions, of course. The latest of your transactions is that all your credit card transactions that you do for promotional offers with your e-tailers, with any e-tailer that you deal with, any online credit card offers that you avail, looks like you will be taxed for those offers that you're availing for your online purchases using your credit cards. To help us understand this better, we have Mr. Archit Bansal, founder, AB ConsulTax, joining us. We also have Mr. Abhishek Rastogi, tax expert, set to join us as well. Archit, talk to us. Initially, this looks like, whatever offer you thought you were availing, whatever little margin that you think you are going to get, you have to, forcibly give it away in the form of GST. Right, Archit, if you can just unmute yourself.
So I'm audible.
Yes, you're audible now. So it looks like, whatever little arbitrage or margin you got from that special offer from your e-tailer because you owned a specific credit card, that, delta or that little discount also has to be given away in the form of a GST.
So there are two things, main things which we have to look forward. One thing is that this is not to be borne to by the ultimate customer. The ultimate customer will not impact with this levy of GST. And second, it is arguable and disputable because there is a GST chargeable on the supply which has been made by the banks and gateway platforms to the e-commerce platforms. So this is a transaction between them, and GST has to be charged on the transaction between them, not on the ultimate customer. But ultimately, it is going to increase the cost, and ultimately, it has to be looked with a minor lens, and it has to be scrutinized to check whether the GST would be leviable or not. Ultimately, there is no clear guideline from the government, and there is no specific circular which has been issued by the GST authorities in relation to the same. But yeah, ultimately, if it is going in forward, GST would be levied, then ultimately it will hamper the business arrangements which has been it's already made by the companies.
Right. Stay with us, Archit. Karthik, let's understand this basically. When you after you buy something online, when it finally says if you pay using this particular credit card, you get a certain offer, you get a certain cashback, or you get a certain discount or something like that. Now with this new move, it basically means that whatever discount you're getting or the special cashbacks you're getting, a percentage of that has to be taxed. Will go away as tax.
So I'll tell you how I have understood this story, and Archit might be able to correct us once he's back when his line is better. See, now there are two scenarios here.
Right.
Number one, let's say you have gone to flipkart.com. All examples, yeah. I'm not really giving a real case study. Let's say hypothetically you've gone to Flipkart. You've bought an iPhone using your ICICI Bank credit card. That gives you a 5% cashback.
Right.
Okay. You've paid the full price. You get a 5% cash back because you used a certain card. Now that 5% on the value, let's say you paid about $1 lakh for the phone, that 5% cash back is about 5,000 rupees. That 5,000 rupees is a transaction between ICICI Bank and you as a credit card holder. There's a physical movement or a digital virtual movement of real cash from a banking entity to an individual. Now that is pure 5,000 rupees movement, which seems to be subject to taxation. Right. Now, because there is a physical amount here being remitted back to you as a card holder, it seems to get under the purview of GST. That this is, let's say, the sale of a discount for which the bank has sold you 5,000 rupees worth of services. So, it's a pure transaction. It is subject to GST. Now, imagine another scenario that there is actually no cash back, but there is an instant 5,000 rupee discount. In that case, you are still paying 95,000 rupees using the same card for a 1 lakh rupee purchase, but there is no real movement of cash from A bank account to B bank account. So, there has been a discount offered to you either by Flipkart or ICICI Bank in the example I gave, or both of them sort of, shaking hands and offering that discount to you. Now, where there is no real movement of cash, it does not fit under the purview or fall under the purview of GST. Now, there's a third scenario possible, in which case, let's say the discount that Flipkart has given you for using your ICICI Bank credit card, that money that Flipkart tends to lose by virtue of that discount is actually paid by ICICI Bank to Flipkart. So, now the movement of cash has happened from A business entity to B business entity, in which case, again, since there is physical movement of cash, it is subject to a GST collection. So, three basic scenarios where if there's an instant discount, no movement of cash, no GST. Any movement of cash from any party to another will perhaps attract GST.
Right, so that's for all basic clarity on what the latest GST move means. We are waiting for Abhishek Rastogi, tax expert, to join us. In the meanwhile, we will continue with the show and move on to another story that we are tracking, and that is tomato prices, which have surged up to 140 rupees per kilogram in Delhi NCR. And that problem continues to remain. Bear in mind, we were telling you how tomato prices raced past the 100 rupee per kilogram mark, and that is continuing to unabated. Karthik, incredible, isn't it? 140 rupees per kg, which basically means at this stage, tomato is more expensive than chicken.
I was just going to tell you that. You stole my thunder, you stole my chicken, and you stole my eggs. But yeah, absolutely. Tomatoes as expensive as chicken. So imagine if you want to cook butter chicken today, which entails both chicken and tomatoes, imagine the price you're shelling out to make that that lovely, delicious, it's making me hungry, but but that's the amount of money you shell out. Of course, so whatever supply apparently came from near about Delhi and all the areas around Delhi have already been sold. So there is again a shortage when it comes to the supply of tomatoes, right? Incidentally, we were discussing when prices had just about touched about 120 rupees a kg or so, that the real belts where tomatoes are produced in India happen to be Maharashtra, Karnataka, partly Kerala, and some other southern states, Telangana if I'm not mistaken. So, tomato being a low shelf life product, by the time it travels from, let's say, any of these southern or western states all the way by road to, let's say, a Delhi Azadpur Mandi, the life left in those tomatoes is in any case for just a couple of days at most. So, we've come to a situation where again whatever supply from the neighboring towns and states from around Delhi had come to the mandis have been exhausted, and at this stage, of course, we are looking at this situation where tomato is as high as 140 rupees a kg, and look at the sharp rise we have seen from, let's say, 60 rupees, 70 rupees a kg just about 2 weeks back, going all the way up to 100 rupees a kg, 120 rupees a kg to now 140 rupees a kg. Really says something about where we are right now when it comes to our quest to buy tomatoes.
What I'm interested in is, like, what will this do to the food inflation rates across the country? We're talking about a time when inflation is sort of abating. It's coming into a range that we want to control. And what does these supply side issues, which are pushing up, essential commodity prices, what does it do for the overall commodity, inflation per se? That will be interesting to watch.
Yeah, absolutely. See, food inflation is obviously always a critical part of inflation, because that is where there is forced consumption, and it's not something think that can be avoided because this is necessity and you've got to go and purchase, and it's difficult to sort of tinker around too much with the demand because these are essentials and these are ingredients that go into everyday cooking. So food inflation per se, of course, is an important bucket of inflation. And even from a consumer sentiment point of view, this is something that hits everybody equally. So it's not that you may have a preference for a certain cuisine and I may have a preference for a certain different cuisine. Tomatoes, onions, potatoes tend to be staple ingredients across pretty much everything that you put on your platter. So food inflation, of course, but again, since this is a direct impact of a bad or a delayed monsoon, of flooding at warehouses, damaging of the available supply of the end product, one would tend to believe that it's a short-term phenomenon. And as soon as the supply side is fixed, we should be able to get the prices back into a more palatable range of prices.
I have two words to end the show on, and that is fingers crossed for tomatoes and tomato prices. And here's hoping that this doesn't extend into other vegetables that we love and we consume on a daily basis. And with that, we've completely run out of time here. Thank you so much for watching. Thank you, Karthik, for being with us. This is Krishnakumar signing off. Keep it with News9.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0. This and more. Streaming on India's first OTT video magazine, News9 Plus. Download now.
Years ago, the COVID-19 pandemic brought the world to a standstill. This year, crowds are gathering at Delhi's Pragati Maidan to relive the joy of reading. The event, the New Delhi World Book Fair 2023.
People still want that touch and feel of a book, the smell of a book, what it means to hold a book in your hand.
With this, we are back with a new scale, with an enhanced scale.
I think, everyone's had more time to sit and plan the book fair more. And they're all the big names in here.
The reading habit is definitely on the rebound.
So, what's new at the World Book Fair 2023?
It's a wonderful thing that the entire book fair is under one roof, which has never happened. Earlier it was in silos in different pavilions and there was no connectivity in between them. So some of the people used to miss out some of the content. Now it's being under one roof, the new world-class infrastructure at Pragati Maidan is ready. We are hosting it here. So it's a new beginning and a new layout. So anyone who enters in Pavilion 5 will get to see the Azadi Ka Amrit Mahotsav theme. Who goes to 4 will have international exposure and G20 pavilion. Who goes to pavilion number 3 will have exposure to children activities in children pavilion. Who goes to 2 will have an exposure to language pavilion. And further we go up, we have a special pavilion for National Education Policy 2020. This is the biggest education reform that has ever happened in India and across the world during COVID. So we are trying to showcase how this policy is going to become the foundation of the future of this country.
Meet the Author sessions are a hit with book lovers. On day 1, Nobel laureate Annie Ernaux's interaction with Nilanjana Roy drew an enthusiastic response.
The infrastructure is so wonderful that everything is happening under one roof and it's also well laid.